Welcome to the Hurst Trading Room. This is our video update for the 29th of April 2013. Before we take a look at the markets, please make sure that you have read and understood these disclaimers. Let's start by taking a look at the current trades that we are in. We aren't in a trade in the S&P 500 because, as discussed last week, I expected the interaction to be a G category interaction, and so didn't enter into a long trade in the S&P 500, but I did enter into a long trade in the Nasdaq. And here is a chart of the Nasdaq, and the reason why I entered into this long trade, as discussed last week, was because of the potential of this trough over here being a trough of 20-week magnitude, which, with the benefit of the past week's price action, now, as you can see, looks very likely. And in fact, Sentient Trader has phased the 20-week cycle trough over there. That was on Thursday, the 18th of April, I believe. And so with that being a 20-week cycle trough, which was one of the analyses that we have been tracking or considering, of course, I entered into a long trade at the point at which price crossed the FLD. In fact, the FLD has shifted ever so slightly, and so as you can see, there is our entry price. And here is our T1 target. Our T1 target was very nearly reached on Thursday. Price was only a few ticks below it. And our T2 target is up here. Now you will know that if price very nearly reaches the T2 target, then we will tighten our stops, but we don't do that when price nearly reaches the T1 target. The reason for that is because the T2 target is calculated on the basis of cyclic principles. However, the T1 target is purely a risk reduction target. And so when price almost reaches the T1 target and just misses it, it doesn't have any significance from a cyclic perspective, and so we don't do anything. We could, of course, tighten stops if you wanted to, but at the moment I'm not doing that. And so that's the situation in the Nasdaq at the moment. We're making a nice profit on all three of those trades in the Nasdaq. And let's take a look at the British pound to US dollar. Last week we entered into a long E category trade in the British pound to US dollar because, as discussed last week, we were expecting the formation of the 40-day cycle trough. Here you can see the nest of lows. That trough has clearly occurred, although it's not confirmed yet in the analysis. But of course, we entered our long E category trade as price crossed up above the FLD over here on Thursday of last week. And as you can see, our T1 target, which was somewhere over here, was reached on the bar of entry on Thursday, and so we were in our trade one for less than a day, which is something that often happens when trading the 20-day FLD. And our T2 target was in fact reached earlier today. Price almost reached the T2 target. It missed it by only a few ticks on Friday, but it broke up above the T2 target today. And so we exited from our trade 2. So we're in a great position, of course, now with this British pound to US dollar trading opportunity, because we have locked in our profit. Our trade 3 will now exit at the break-even level over here, the level of entry. That's our entry price, and now, of course, our break-even level for trade 3, and we have started implementing the 3-bar trailing stop. And so we have locked in some profit in this British pound to US dollar trade. In fact, we've locked in a lot of profit. As you can see, the remaining, the trade 3, which is still open, is presently making $1,350 profit. And the reason for that is because of the particular set of circumstances that led to our entry into this trade. The first thing, of course, is that our underlying trend is strongly bullish, and that is because we have such a prominent cycle trough over here in the middle of March. As discussed over the past month or two, that trough is a trough of at least 18-month magnitude. It might even be a trough of 54-month magnitude, which means that we have a strongly bullish underlying trend, which means that the longer cycles are all pushing the British pound upwards. And of course, when we have a bullish underlying trend and we're entering into a bullish trade, then the size of our trade is particularly large. And because we want to capture those big, strong moves up, which is exactly what we're doing. And the other reason, of course, why we're making so much profit out of this particular trade is because we entered fairly large position sizes for each one of our 3 trades. And that is because we actually entered this trade with very small risk. As you can see, and let me just clear this chart, the distance between our entry price over here and our initial stop loss, which was somewhere down here, was in fact very small. So of course that is the size of our initial risk, our theoretical risk, and with such a small risk we could afford to take a large position, particularly because we had such a bullish underlying trend. And so those circumstances worked together to provide us with a very profitable trading opportunity, which is working out very well for us. In the euro to US dollar, we haven't yet entered into a long trade, but we are standing by to enter into a long trade. And let's take a look at each one of our instruments and discuss the upcoming trades now. For more information about gaining access to the full-length videos where we take a look in detail at the analysis in each of our instruments and consider the upcoming trading opportunities, please take a look at the Hurst Trading Room page on our Sentient Trader website.